4 customer service must-haves for investors. Account statements and other data. This is Ken Boyd, the founder of the Accounting Accidentally website. And what I'm referring to is a blog post that I wrote a little while ago on must-haves, things that I really think every investor needs to have in order to be fully informed on what they own. So I start off with an analogy. We've all been to these places. It's the quirky restaurant in every city that every city seems to have, and the service isn't very good, but all the diners think it's part of the charm, and they're willing to put up with it because they're in on the joke. It's unique, it's quirky, everybody in town goes there. So it's the typical tourist destination. I was thought of this when my wife and my daughter went to a place like this in Denver. Now that's okay for a quirky restaurant, but it's a big problem with investing. And what we're talking about here specifically is monitoring your investments. How do you monitor your investments? What do you have to have from a money manager? Whether it's from your financial advisor, your mutual fund company, your retirement plan. Well, the first thing is account statements. And one of the biggest innovations of the past 30 years when I started in the business in '85 until today is we have made huge strides in making account statements easier to read and digest. And I've always said throughout my blogging and videos that as painful as it is sometimes, you need to download that account statement or open the mail and look at the performance of your investments even when things haven't gone very well. Even in a bad month, you need to read them anyway because you need to understand why your investment didn't do well and get clarity about what you own, how it will perform over time, how is it performing in comparison with the overall market. And those are pieces of information that are in every mutual fund. Investment performance. Let's assume, for example, that you own Mountain Type Mutual Fund, and the fund's objective is to hold stocks in the S&P 500 index. And the manager is trying to outperform that index, the S&P 500, over time. And in the month of June, assume your fund, the Mountain Top Fund, was down 3% and the S&P declined 4.5%. I'll use an actual example, which is Growth Fund of America. Here is the prospectus that I pulled up online. And one of the first things you'll see when you pull up a summary, if I scroll down, is the performance of the fund over a period of years in the form of a mountain chart. And then you'll also see off to the right here, market capitalization, how big are the companies they invest in, and a really handy chart here that says ownership zone. So what it does is it gives a chart with investment style along the bottom and market cap along the vertical axis, and it tells you, based on shadowing information, where this fund fits in that scale, in that graphic, which I think visually really helps an investor understand what am I investing in. You can see in this case that these are large cap market capitalization, meaning the amount of stock they have outstanding. Large capitalization, growth stocks. Large capitalization, growth stocks. Another thing you need to understand is cost basis. And cost basis is your cost of the fund, stock, bond, and it's really important that you need to have this information when you sell an investment. Way back in the 80s and 90s, before account statements were improved, cost basis was not included in account statements. And when people sold an investment, there was a lot of running around trying to find trade confirmations to figure out what the cost basis was in an investment, to get the information to the accountant to calculate a capital gain or loss. That's become easier because now the statements you get are much better. Another thing to keep in mind, if you're buying a mutual fund, for example, you pay the POP, public offering price, and your cost basis needs to be adjusted for stock splits and stock dividends, which can be common. So as an example, if you own 100 shares of stock and there's a 2-for-1 stock split, you're going to have 200 shares, twice the stock, at a cost basis of $10 a share, half the price. Stock dividend means that you actually get more shares of stock, but the market price stays the same. Stock dividends, you can get a dividend in the form of stock rather than getting cash, that's going to adjust your holdings as well. Another important measure is beta, and I preach this in a lot of my videos. Beta is a measure of volatility, and if I scroll down toward the bottom of the Growth Fund of America, here's a section on volatility, and again where it stands in a chart. But the specific number that I'm speaking of, if I keep going down, is beta, which is a measure of your fund, and there's a definition here by the way, which is a measure of your fund's volatility in comparison with the overall market. So Growth Fund of America is a large cap stock. How does the fund's beta compare with the S&P 500 or a broad basket of stocks in an index? Well, you can see it's 0.98, which means it's almost exactly correlated. A beta of 1 means that your fund moves in exact correlation with the overall market, which is almost the way it is for Growth Fund of America. So you need to understand that beta. And finally, investment objective, which ironically is always going to be toward the top of either a website or the summary prospectus. And you can see that up here we have a summary section that visually gives you exactly what Growth Fund of America is trying to do. 82.4% U.S. equities, they're big capital stocks. You'll also see over here to the left what the costs will be. Returns with sales charges included. So you can see they make it very visually apparent what the fund is trying to do in terms of asset mix, what the costs will be. They have a separate whole tab for fees and expenses. So we need to understand that objective, because if our fund was down 3% for the year and the overall market was down 4.5%, we've slightly outperformed the benchmark index in the Mountaintop Fund. Well, why is that? How volatile is my fund compared to the overall market? If it's more volatile, was that something that I expected? Is that some risk I'm willing to take in exchange for a higher return? So understanding why your fund performed the way it did has a lot to do with understanding the investment objective. So those are some tips, some must-haves for investors. Remember, Counting Accidentally, the blog. You have free resources over here on the left, including the Personal Financial Mistakes webinar that you can access as well. Thanks very much for watching.